Welcome back to my channel, everybody. Thank you for tuning in. And in this video, I'm going to do one of those trade recap, trade reviews, going over some of the plays this week so far for Monday and Tuesday, going over my thought process, going over a little bit of market context so you get a better idea of how to trade for the rest of the week. Now, I do these type of trade recaps on a daily basis on my Instagram. They're good to go back and review that I post pretty much every day on my Instagram. I will link this in the description below. Definitely worth to follow and definitely worth to go look at my story every night when I post these recaps. But this is going to be a little bit more in depth, going over some of my thinking processes basically, and going over the context, what I want to look out for the rest of the week compared to the first 2 days of this week. So without further ado, let's get right into the video, and I want to go over some of the trades so far. So as always, I start with the market overall as a whole, and that's the S&P 500 is really what I'm focused on. My favorite instrument to trade. I love trading SPY options. It depends also on the instrument you trade. You could trade the future. You can trade the stock. It doesn't really matter. It's the market overall as a whole, and the instrument is just a subproduct to it, to this equation. But, on Monday, August 17th now, this is the first day of the trading week, the market moved from a low of 3374 to a high of 3382-ish. So it moved in about a 8-point range, which for the S&P 500, an 8-point range is nothing. If you want to buy the dip, the relief bounce after the dip is nothing crazy. Yes, we break the high, but look, every high that we break immediately gets rejected. We come back down and revert back to the mean, basically, into a middle range where market participants consider it a fair price. So today, or Monday, yesterday, the day I'm recording this video, was basically a balanced day. It's not a trending day. It's a day where you have to recognize that there's not going to be a lot of follow through. It's going to be a tough day to trade. There's low volume. I mean, if you compare the volume, it's nothing. And obviously, without even looking at the volume, the way the market traded, you're going to be able to realize that it's a choppy day. It's going to be tough to get any follow through. It's going to be tough to trade whatever strategy that you're looking to trade, just because of the context of the market and basically what it's doing. And then you as a trader, you have to adapt to that, recognize what it's telling you, and then trade accordingly to the other stocks that we do trade. And I'm going to explain Boeing now, because that was a stock that looked very good to the long side, but because we had this market context, the S&P 500 chopping, we got no follow through. So Boeing had a daily demand zone at 170, 150. And if you go to an intraday chart, and then we're talking about Monday now, we had a nice drop from Boeing. We opened up at 178, dropped all the way down 7 points into this 171.5 demand zone. And this is perfect. This is a 15-minute chart. And the first 1, 2, 3, 4, 5, the first like 9 or 10 candles were red candles, heavy volume. You had a lot of traders selling into this move. And then look what happens when we come into this daily demand zone. The first time we test it, we stall out. Why do we stall out here? Volume came in, and now we have basically a buy order imbalance. It's basically holding price up, and if there isn't enough supply to take us below this demand zone, we're obviously going to bounce. Now, keep in mind what I said about the market. Let me go over here. The market this day, and the time Boeing was going into demand, was at the time the S&P 500 was near the highs, trying to break out past the highs, and we just couldn't do it. So we were chopping sideways as Boeing was coming in demand. You could argue that Boeing was showing relative weakness, and if the market did want to bounce, then Boeing most likely would have bounced hard. But because of the market context and the way it was trading, Boeing had very minimal follow through. Yes, we bounced off demand. Yes, this strategy works with a choppy market, balanced, trending, whatever you want to call it. The strategy always will work because it's how price moves. But there was little follow through. So that's why you have to go back to those 2 points I said. Either take profits off the table fast or don't trade at all. Or size down on your position also. So instead of going, a normal position size of 50 contracts, once we come into demand, maybe only go 10 contracts. And then if this price, comes up $1, $2, whatever, sell maybe 75% of your position. Take it off the table as fast as you can while the market is trading sideways. If the market is trending up or down, then obviously it's a different story, and that's a type of day where you could hold your winners on for longer. So we came into this demand zone, bounced off it, gave us a perfect entry. You could have got in anywhere down here, depending on your risk tolerance. You could have waited for price to start relief bouncing a little bit. Depends on what type of account you have, your risk. It depends on a lot of different factors. But honestly, I probably would have waited myself until we came and made a higher high, probably above this 172 and 20 mark, or 172.10 mark, and putting my stop loss at 171.40. So about an 80-cent risk. And obviously, our reward was very limited because there was no follow through. So from 171.40 to 173.50, about 2 points. Nothing crazy off of this demand, but the point is that you have to recognize and adapt to the context of the market and trade accordingly to it. This was a good play. Unfortunately, the market was very choppy and balancing out. Now, the next play I posted in the pre-market plan on Monday, which was Amazon. We had a 4-hour supply at 3183. I said it looks very bearish in my opinion. So fast forward or rewind back to Monday. The 4-hour supply was created on August 13th. Fast forward now to Monday. Price on Amazon rallied into the supply zone. And if actually I compare this, quick study, compare with the S&P 500. This was at the same time the S&P 500 looked very bearish in the morning before it rallied to the highs. So this purple line right here is a compare with study on ThinkorSwim. It shows the S&P, which is the purple line. As the S&P was coming down, the market was rallying into supply. So if you look at the market overall, before it started chopping, it looked very weak. While Amazon was coming into supply, could have gave us a good play showing relative weakness compared to the market. Let me remove this. And we hit the supply zone pretty perfectly, gave us our nice base up here, and then started dropping, came back, retested the zone, and dropped about, I don't know, 30 points, 40 points from this area. So this trade right here on Amazon was a good one. Now looking at the S&P 500 today, we had a 3-hour demand zone at 3380 3/4. That was created in the overnight session right over here. Price came out of the zone, formed actually demand, and then we came back before the market opened, pulled back and tested this 3-hour, and then we bounced about 10 points from the first time this zone was tested. So this yellow circle right here is the first time that price entered this zone after the imbalance was created, and we bounced about 10 points. Would have been a good trade if you trade futures before the market opened. And then we came up to the highs. This is exactly why I do not buy breakouts. So we had a pre-market high. If you're looking at pre-market high breaks, you know, we got a point higher before we failed. Broke above pre-market high and they unloaded. They kept hitting the bid like crazy, aggressively, and the market started tanking pretty hard. Not the craziest of volume either. Came down, tested the 3-hour demand zone again, bounced about 4 points. Wouldn't have taken this trade because obviously the zone is used, and I don't trade really used zones, especially with the hard sell-off like this. And then the next candle was a huge, 8-point candle. So there you go, exactly my point. You know, this one candle on a 5-minute period today was 8 points compared to yesterday, which the whole day traded in the 8-point range. So there's your context a little bit right there. Very weak, very bearish market. It completely ignored this 3-hour demand zone, broke through it, and now this zone is completely invalid. I'm actually going to remove this zone. But the first time that we tested it, did produce a nice bounce if you're nimble enough to trade futures before the market open for a nice morning rally. So now the last thing I want to go over is on Microsoft, and this was posted in the pre-market plan today. So the classic 4-hour supply, this is a strong zone, and I'm watching the 211.78 for us to reject today. Microsoft opened up, rallied 2 points into the supply zone, and look what happens. We get in supply, price stalls out. It's a supply imbalance, meaning there's sell orders sitting there, and if there's not enough demand to take us higher and rally past the supply into the upside, then obviously we're going to reject because supply exceeds demand the first time the imbalance was created, and now supply exceeds demand the second time we come into the imbalance, which causes price to come down. So this was a good short for about 3 points. Nothing crazy. Didn't really give us the best of entry. It wasn't the best ideal entry for confirmation. But this was a good short right into 4-hour supply. This was posted, like I said, in the room today for the pre-market plan. So just nothing crazy going on. Let's go back to the S&P. Nothing crazy for this week. You know, today got a little crazy, but we made back all our gains. And we kind of opened up pretty flat. We closed pretty flat compared to where we opened at. Looking back on Monday, you know, the market was trading so sideways. Very hard to trade that. So today I had an approach with caution a little bit. And we got that nasty sell-off. Didn't really take any trades on the S&P 500 today. And then another point I want to make is that ThinkorSwim. I know a lot of you guys, girls, use ThinkorSwim. It's been acting very weird the past 2 days, impossible to trade. Sometimes it doesn't even load, open up, quotes are delayed. So I just recommend having a backup. Personally, I've been using E-Trade as a backup. I'm going to fund an account with E-Trade. I like E-Trade Pro just in case ThinkorSwim does not work. But if ThinkorSwim goes back to normal, I have no problem using it again. I don't swing trade, so I'm not really too worried about positions overnight and not being able to close them. But just trade with caution. Don't trade the first 20 minutes of the market open. See how the platform is acting. See if other people are having issues with their order fills, with their charts not loading up, and then trade accordingly. So if you have any questions, like I said, message me on Instagram, subscribe to this channel, and like this video. I appreciate it.